Markets are falling. People are panicking. WhatsApp groups are filled with stock tips. Buy this sector, sell this stock, and this sector is going to fall down even more. And in all this noise, people are losing money as well as their sleep. What if I tell you, I have a secret strategy from which you could have earned 15% consistently in CAGR over the last 10 years? What if I tell you, you don't need to chase anything, you don't need to predict anything or purchase even a single stock? Sounds unbelievable, right? Don't worry, I'll break down this for you. Hello my dear friends, I'm Dr. Atul Sawant, your Doctor of Finance, and welcome back for today's special episode. Let's first understand the real problem. What do most retail investors actually do? They will try to time the market. They will try to find the sectors which will go up over the short period of time. They will try to follow stock tips from YouTube, WhatsApp, and each and every of their friends. They try to keep buying and selling, and most importantly, when the market falls down, they will panic. And this cycle keeps on repeating again and again. But the harsh truth is, no one can predict consistently which sectors will go up or down, which will perform good and which will not. Even most professionals are not able to do that. And because of this, they remain stressed, keep checking their portfolio every now and then, become frustrated when markets go down and their portfolio bleeds red. Let me ask you honestly, how consistently have you been able to beat the market over the 10-year period? If not, then the problem is not with the market, the problem is with your strategy. Let's look at the real numbers. If you had simply invested in the broad market over the last 10-year period, the following would have been your returns. Nifty 50, 11 to 12% return. Nifty Next 50, 12 to 13% return. Midcap 150 index, 15 to 16% returns. Smallcap 250 index, 16 to 18% return. Nasdaq 100, 17 to 19% return. And gold, 10 to 11% returns over the last 10 years. Now just pause for a second. These are not individual stock picks. These are entire markets. No prediction, no timing, no stress. Now here is my allocation. I'll be giving 18% to all my indices and 10% to gold. Here is the distribution. 18% to Nifty 50 index, 18% Nifty Next 50 index, 18% Midcap 150 index, 18% Smallcap 250 index, 18% to Nasdaq 100 index, and that covers 90%, and the remaining 10% goes to gold. And that's it. No stock picking, no sector betting, no predicting the future. Now let's combine all this data. If someone would have followed my strategy for the last 10 years, then his CAGR returns would have been 14 to 15% for the last 10 years. Let that sink in a bit. 15% returns without stress, without production, without stock picking. Think of that. The best part of this strategy is that you are completely diversified, not just across India, but also diversified in US, also diversified in asset, that is into equity as well as in gold. So you are basically diversified not just in country, but also in currency, that is INR as well as USD, and also in gold. So basically whatever happens in the world, sometimes Indian market will go up, sometimes US market will go up, sometimes gold will go up. You will always be getting returns somewhere or the other, plus you will be always protected from the depreciation of INR. Now let's compare my strategy versus reality. Most of the retail investors know they either have a stock portfolio or a mutual fund portfolio. When they create a stock portfolio, they have 10 to 15 or even 20 to 30 different stocks. Out of that, hardly 10% will give you good returns. Remaining 40 to 50% of your stocks will be giving you average returns, and the remaining 30 to 40% will be giving negative returns. And when you consider the entire basket, your returns are suboptimal most of the times. Lot of investors also invest in mutual funds, but the problem is they have so many different mutual fund schemes all clubbed together, and most of the times they have a significant overlap with each other. You will be having investments in small cap, mid cap, large cap, flexi cap, multi cap, different asset allocations all together, different funds together, and you really don't know whether you are diversifying it or whether you are overlapping everything together. So because of that, your portfolio actually gives you returns of around 8 to 12% at the max, or even lower. Plus along with this, there is always stress, there is always fear, and there is always confusion whether you have chosen wisely or not. And most importantly, you waste a lot of time and peace of mind. So basically, you are trying to beat 15% where you yourself are not even consistently getting 10 to 12% returns. Isn't it ironical? When you follow this allocation by Doctor of Finance, the biggest thing which happens is a shift in your psychology. Investing should not lead to stress. Investing should lead to peace of mind. So with my strategy, you will be obviously diversifying across India, across all sectors. There will be no overlap with each other. You will be investing across USA, across gold. And so whether India grows or goes down, USA grows or goes down, gold grows or goes down, you will always be in the game. But let me be honest, this strategy is not magic. Markets will even fall. Small caps can fall even 30 to 40% more. US markets, the Nasdaq 100 can fall even 40 to 50%. That is the reality of the world. Anything can happen. The Nifty 50 can also fall, as we are seeing it right now. See, volatility will always remain. You can't do anything about it. But the best part is, you will be never out of market and you will always recover when the market recovers. Plus, you will be always diversified. Guys, I've always seen, you see my videos, but you don't subscribe to my channel. If you like my content, do subscribe to the channel and hit the like button so that I will also grow along with you. Now, my dear friends, I want to do a simple exercise. Go and honestly check your portfolio. Open your Demat or trading accounts and your mutual funds account and see what returns have you got over the last 5 to 10 years. How much stress have you taken and how much time have you given for getting those returns. Now compare that with my simple strategy and see whether you are getting 15% returns or no. And these returns are without any prediction. I don't need to do any sort of prediction to get these returns. My philosophy is simple. Don't try to oversmart the market. Instead of that, become the market. Because when you become the market, you stop overstressing, you stop chasing returns, and you start compounding. And that, my dear friends, is the real way to create wealth stress-free. So this is Doctor of Finance, making your finances healthy. If you like this video, subscribe and share it with all your friends, especially during this market downfall. Trust me, it will really help them. Thank you all. See you in the next video. Signing off, Doctor of Finance.